in my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith. Yes, we're a little bit late. I'm still trying to adjust back to vacation period and everything. But I'm really excited for this episode. I think for the longest time I haven't physically or personally spoke about investing or anything. And I decided, let me just, connect with people that I've been following for a good while. And I'm really excited for this conversation, guys. I'm really excited. I hope you guys are excited as well. Okay. So let's bring to the stage Andre, aka Dre. Hold on. I have to give you the real thing. Yes.
You're hilarious. You are hilarious.
Oh man. I try. How's it going? How's it going? And I know when I say Dre, people are gonna get confused with others, but don't worry. They're gonna know about you.
100%. Well, first and foremost, thank you for having me. Like when you messaged me, I'm like, this has been long overdue. We've been on the same wavelength, same wave path. I think we see the same type of goal and the same focus. So, appreciate you for having me. I'm doing great, to be quite honest with you. There's a lot happening, as you would know, just entrepreneurship, professional life, and other things. But I'm excited to be here so that we can have a great conversation and probably throw some ideas out there, and let's see where this goes.
Some healthy conversation. And yes, because we were speaking offline, and I was like, we were trying to remember how we knew each other. And I had to big up Carnell. So, Carnell is in Ottawa now, or not even Ottawa right now. But I can't tell you where he is now because I'm
somewhere
not sure
around there.
Everyone knows.
Somewhere around there.
He's somewhere, right? But I'm definitely excited that we're here connecting and seeing how we're connected, and even seeing you like on Facebook and like one of the chats that we're in. Big up Kurt because he facilitates that Facebook group, and I really love it. I'm just sad that I missed the other event the other day. I heard it was lovely. How was it?
Yeah. In all honesty, it's always a blessing to be able to meet up with folks like Kurt, Robert Dockery, and all the others, Adrian Palmer. Like, there's so many other folks out there within the Black financial space, or just the financial space, but people who are Black within that space. And it's not really a topic or a subject that gets spoken, in my personal opinion, by a lot of Black families. So I don't really have that outlet, so it's always good to meet up with everyone. The last meetup we had was great. We always try to choose a Black restaurant so that we could spend our hard-earned dollars within the Black community. And we're hoping to get another one when outside gets a little bit warmer, so in the summertime. And we are trying to prepare to make that one a bit more structured so that we could, try to provide a little bit more value rather than just meeting up just to talk, which is great. But we want to, be a little bit more intentional about how we meet up on what we do and how to help people achieve their goals.
True. And let me tell you this. Since I've been back, there's only been 3 good days. Why is the way
it's bipolar right now.
Why I was slow with coming back to working and stuff, because it's ridiculous. Listen, Toronto, fix up. Fix up yourself.
Yeah, we
right?
need a little bit more vitamin D out there. So,
Exactly.
yeah, it's been a lot of rain, a lot of rain. My lawn is happy for it. I can't lie, but we want
Yeah,
to be able to enjoy our weekends and so. But hope it'll change up soon. We're entering into June
slowly but surely, you know.
for sure.
But I definitely want the folks to understand what you mean with like meeting like-minded folks that talks about finances. So tell the folks about Andre.
Okay, so I was born in Alberta, Canada. A lot of folks don't know that about me. However,
Ooh,
I was not raised in Alberta, Canada. By the age of 1, I was living in Grenada, beautiful island of Grenada, and I
okay.
stayed there till I was 17, and then I moved back to Toronto, where I continued my studies in civil technology. I got my diploma, and then afterwards, I got my university degree in civil engineering. And from that moment, when it comes to finance, my finance journey started off pretty rough. You're
Mhm.
talking to a teenage Caribbean boy who didn't really have any financial, I had zero financial literacy, to be quite honest with you. And the
Mhm.
one thing that I was always taught is just, if you're going to school, just take out the school loans and everything. So I fell in the school loan trap. I went into
Yeah.
that debt cycle where I finished with over $70,000 of student debt, near 80,000. It might be 80, to be honest with you.
Jeez.
Yeah, I know. School was expensive, and it
But
wasn't
that
even
makes
just
sense.
school.
You're an engineer.
In
Makes sense.
not just engineering, but also
Mhm.
when I really did the math, a lot of it, close to half of it, was just accommodation. So I was paying rent from since I moved up here. I didn't have a place to, not be able to pay. So I was paying rent, especially, and also when rent was like they were expensive, but somewhat still affordable. And rent has actually, I remember clearly when a 1 bedroom apartment, you could have probably got it for like 1,200, 1,300 at the time. And good
Yeah.
luck to you getting a nice 1 bedroom apartment for
Right
1,200,
now.
1,300 today, right? So
By yourself.
rent by yourself. And so that's the one thing that I like. A lot of it was just me paying rent, and the rest of
Mhm.
it was just tuition. And whatever extra I had, I didn't manage it. Like I was spending it, and it's almost like free money, but it's not free money. You have to pay back at the end. So I got $70,000, and right when I finished school, I think that's when my financial literacy started developing immediately. I started listening to someone well known. His name is Dave Ramsey, and I can't swear by everything Dave Ramsey believes in, but when it comes to paying off debt, he's on the ball when it comes to paying off debt. And from that, I went into debt repayment mode. One of
Okay.
the very first things that I did was the biggest mistake I know a lot of people make is they get a new vehicle right out of school. So then you fall into
Right.
that car payment finance trap. And that was the one thing Dave Ramsey taught me was like, don't get a car. Whatever
Yeah.
you do, don't get a car. And so I got a affordable car that I was driving during university, paid like $3,000 cash for it, with the help of my parents. And that's all I did. I rode my 2007 Nissan Altima during 2020. And I,
Mm.
I I drove it to the ground till it couldn't drive no more. So that was one of the very few things. And fast forward, I was able to pay off over $50,000 worth of that student debt in 2 years.
Two 2 years? Wait,
In
wait,
two
wait, wait,
years.
wait, wait,
Yep.
wait, wait. How?
So it's a great question. And to be quite frank with you, when I started working, so first things first, I was living with my partner's family
Okay.
during that time period. So I kept my rent to a minimum. So let's just say I was probably paying close to about $500 a month in rent,
Mm-hmm.
just to help out. And then after that, it was no spend. Like I wasn't spending money on coffee. I wasn't spending money on lunch. I wasn't buying. I didn't go on vacation.
Yeah.
A lot of people will say like, "Hey, well, you still need to enjoy your life," but not to me.
Mhm.
Not when you're in $70,000 in debt. Like you could come up with a different plan if you're probably 20,000. Yeah, you could probably still be able to put yourself in that position, or maybe
Mhm.
15,000, but 70 plus dollars worth of debt, I didn't feel comfortable saying, like I should be rewarded by these luxuries. I didn't see it as that at the time. So I kid you not when I said every paycheck that I got,
Yeah.
literally 80%, well, maybe not 80%, but close to 70% of it went towards my debt. And I was just paying it off aggressively. So I put into effect what we call the snowball method. So I
Mhm.
looked at the different the different debts that I had, and I picked the smallest one first. And it wasn't a math thing; it was just more of a psychology thing. It was like, okay, if
Mhm.
I could get rid of this $500 on my credit card first, then I could go look at the next debt that I had, and then I just kept that momentum rolling. So I was able to put the snowball method into effect, and I
Mhm.
was able to pay off $50,000. And one of the big catalysts also as to why I went into overdrive when it came to that is I went to the bank to see, what do I need to be able to get a loan? And they said, honestly, unfortunately, if you're coming by yourself, like you would have to get rid of out of your three student loans, you have to get rid of two of them, which
Jeez.
was equating to that close to about that $50,000 mark.
Okay, question. Because
Let's
I
go.
want. So one thing I like is you had a method and the no spending. Some people are gonna hear this and they're gonna be like, serious? But you had a goal and you were like, nah, like 70K is wild. I need to get rid of this. So like when you had the snowball effect, at what point were you like, forget it, I'm this. No one can tell me nothing. This is going to be gone in like this.
Honestly, I would say like I was a bit addicted to the whole process because when I tell you I was listening to Dave Ramsey every day, like every day I was traveling to Mississauga to my work at the time, which is in
Mm-hmm.
Thornhill. And I on my drives, I'm listening to Dave Ramsey. I
Okay.
just like it became a part of my life. Like he's like, you're not going on vacations, you're not buying this, you're not buying that. And I was a big shoe head at the time. So I
Yeah.
had like a decent shoe collection and I was not buying shoes. Foot Locker didn't see me. Like at one point I just had like the same wardrobe. Anytime I had to buy clothes was like the last minute. Like I said, I went to the extreme just because I felt
Yeah.
like I was in an extreme situation.
Okay.
So when I got rid of the first student debt, which was I believe it was close to about $20,000, like
Mm-hmm.
just like I said, the reason for the snowball method was just the psychology aspect of it. Like I was so excited, I was celebrating, I was so happy. I'm like, all right, now the next one, and what I was able to do was make minimum payments on the others, right?
Mm-hmm.
And then now with one gone, that minimum payment that I was making on that
Goes to
one
the
goes into the other.
so
So
it
and
just
then
builds up
it just
faster.
keeps rolling and rolling. So that snowball just kept getting bigger. And currently I still have one more. And the
Mhm.
only reason I'm not aggressive, I could have paid it off, but the only reason I'm not aggressive with paying it off is because of COVID, they took off the federal interest on it.
Okay.
So there's
Yeah.
no interest on it. So I'm like, I'll just keep
Like
doing the minimum payments while I now stack up my investments and start building my TFSA and RSP to the same effect, almost like how I paid off debt.
so that obsession to pay off the 50,000 because you have like 20,000 left because there's no interest, which is ideal. That's and I always tell people that's more manageable for you not to feel like more stress, right? That
Yep.
a big weight is off
Yep.
and now you're able to focus on your TFSA and RSP. And like would you ever tell someone, because I know there's some folks that are like, oh, pay off your debt first before you go into investing. Would you recommend folks to do
So
both? I like to do both
I, I
personally.
I do like to do both, and
Yeah.
it's a very beautiful question what you're asking.
Mhm.
However, everyone's situation's different.
Of course.
And the general answer is everyone's goal should try to be debt free. However, I recently had this conversation with my partner is because, like, for instance, we own a home now and we have a
Mm.
little
Well,
one who's in daycare. Thank
mhm.
you. And we're planning out our finance. Well, earlier this year when we were planning out our finance,
Yeah.
we had the real conversation. It's like, okay, there are certain things, for instance, we had to put up a fence for our home
Yeah.
and we had the cash to pay for it. However, there are other things that we are putting our money towards because we have other activities coming up later this year.
Mm.
And we're looking at it, we're slightly disappointed because, like, oh man, we just had to put another set of payments on the line of credit and this and that. And I came to her and I said, look, what I've learned when it comes to investing in the stock market is understanding how the successful companies manage your finance. And if you check any of the financial sheets, the balance sheets, the cash flow statements, and all this other stuff, you notice that most companies have debt, but
Yes.
they have more cash on hand or more assets on hand to be able to pay off that debt.
Offset.
So it's sometimes just a balancing act. So I'm like this weekend actually we were going to be sitting down, we're going to be looking at our expenses, and we're going to be like, okay, as great as it is, because the goal is to still live debt free. But
Correct.
as great as it is, currently we're still paying ourselves first. So right now, every time we get paid, we make sure a certain amount goes into our RSPs or our TFSAs, and then afterwards we have an allocated amount that goes towards the debt. Now, will the debt be zero right now? No, because we're
Mhm.
still building our company. Like being able to put a fence on your property increases the value of your property. So
Exactly.
we're looking at it from a different perspective where we're young and we're still building our castle right now. We're still building our assets. So yes, we may still have some debt. We just have to make sure that debt is not drowning us. The interest on that debt, like credit cards, we're not trying to rack up credit card debts. Line of credit, we're probably utilizing line of credits a little bit more just because the interest is lower. However, we have a cap. We know what number we're not passing on that line of credit. And that's where people tend to fall into that debt cycle. And because I was already in that debt cycle, I could promise you, I'm not going back to
Mhm.
that debt cycle. So,
Yeah. Exactly. Especially because to get rid of 50,000 in 2 years is so phenomenal. And I know that you remember that in the past. You're like, there's no way.
there's
Because
no
you
way
have
we're
you
going
have
back to
that
that.
foundation, right?
Yeah.
And I'm glad that you and your partner is able to like, first of all, I love how you guys sit together and think of these goals and then consider yourself like a business. So beautiful.
And honestly, that's like a new mindset that I have. It's a new way that I'm starting to view things just because I'm
Yeah.
starting to understand the financial world. But to answer your question, ideally,
Mhm.
if you have like let's say $5,000, $10,000 of debt or less, like you should be still investing while still trying to pay off your debt. But you got to know
Mm.
your numbers. Like if you're just doing things just blindly, it's not going to really achieve too much. You need to know your numbers. You need to know how much you're bringing in. You need to know how much debt that you have, and you need to be able to come up with a plan. And that's where, like, I think you and I, we're on the same page when it comes to helping our clients, is because we need folks to understand, hey, this is what you got to do. This is the situation that you're in. Ideally, it's everyone's goal to live debt free, but I think a lot of times we focus so much on the debt and trying to get it to zero that we're not thinking about the future and putting away something for the future. So it all depends on your situation, but there's so many different ways to go about doing things. And like an engineer, like if there's a problem, there's
Yeah.
usually multiple solutions, and it's just trying to figure out which solution fits well with your situation.
True. And it is very true because like especially in this economy, I know like right now
Oof.
everyone's I want to
Yeah.
have that conversation.
Yeah.
I was supposed to have that conversation this week because I missed a week. So folks, loudly,
Don't
loudly.
worry. Don't worry. We
But
got you. We got it here. We gonna have that conversation here.
but the way the economy is going on right now, like I know there's job losses. I know Trump is wilding. He's making the
Tariffs,
stock
tariffs,
market go
tariffs.
like
Yeah.
tariffs and everything. So it's like, how are people able to handle this? But paying yourself first, as it says here, paying yourself first is ideal. And then also just remembering your goals and don't focus on the debt. I agree. If you focus on like right now, you're never going to be able to realize what's going to happen in the future, right?
Yeah.
And the one
Yeah.
thing that I've learned is I kind of go based on other people's mistakes or past. Like, like back in the day, our parents didn't talk about this, right? So now we have to change that cycle and be able to
Yes.
talk about it.
Yeah.
Like, talk about ETFs or stocks and all that stuff, or how to pay off debt and not using payday loans. That is outrageous,
Yep.
right?
16%, 20% interest on those loans. Yeah, or even higher,
It's
to be honest with you.
exactly. So, like, the fact that you were obsessed with paying off your debt, but also remembering, ooh, I still have to think about my future, because regardless of me paying off my debt, I don't want to get back in that cycle,
Yep.
because the credit card shouldn't be saving you and the government shouldn't be saving you.
No,
Ideally, you
you
should be
can't
saving
you can't be
yourself.
looking for those lifesavers from the government, to be quite honest with you.
Yeah.
So just to give like a little bit more insight, just to talk
Mhm.
about how I view the debt. So 2020 is when I started working. So for 2 years, I paid off over $50,000 worth of debt. Now, that's 2020 to 2022. If you
Mm.
remember correctly, 2022 is when the stock market went into a bear market, because that's when interest rates went from the lows to the
Oh,
highs,
I remember.
right? When I saw that, and
Yeah.
being mindful, I'm a self-taught investor. So everything that I was learning at the time and everything that I'm still learning, I knew when the stock market gets cheaper, those are
Yeah.
opportunities. So even though I still had 20,000, just over 20,000 dollars worth of debt left to pay it off,
Yeah.
remember I said I understood that that loan has no interest on it. So I could do my minimum payouts on it. And what did was become an aggressive investor during the year of
Mm.
2022. I didn't plan the bear market. I didn't know the bear market was coming. But when I saw the opportunity, I remember I talked to my mom, like, Mom, she's like, Andre, pay off your debt, but just pay it off. You're almost there. You're almost at the finish line. I was like, Mom, now it's time for me to get aggressive. Like I
Yeah.
can't, I already got on the defensive to pay off all these loans. Now I got to start putting money into my TFSA. So that's when I started buying shares of AMD, shares of Tesla, shares of Amazon, Google, more Apple, more Microsoft. Like I was a lot more comfortable with what I learned during that. So I started learning about the stock market in 2020. So over that 2 years, I was very more comfortable with what I was learning. So I was able to build up my investment portfolio. So we go from $0 in my TFSA to over
Yeah.
50,000 in that time span, right? So even though I still had that debt, I still have the debt to today. Like it's probably closer to 13,000 now. So it's still going down.
No,
But
no, 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 no. Listen, no. You don't want to know why I'm praising you? Because there's so many people that see that amount and they panic, right? They
yeah.
panic and they're like, yo, I'm not even gonna touch it. Yo, out of sight, out of mind. There's no way I'm gonna be able to pay that off. But you found a way. And yes, everyone has their different journeys with like how they're able to not spend and just focus on their debt. But I want people to be inspired by that. 70K from to 13. I have to express that hard. Like
I
that's
do
wild.
appreciate that. I do appreciate that. And there's times like I still can't believe it myself. Like even because it was done so quickly, I just like, But honestly, it was like just mindset. Like it was like
Yeah.
I don't want this. And to be honest with you, when I found about it, I was sad. Like I called my brother. I'm like, bro, I don't know how I'm gonna pay this off. Like I was really distraught when I realized, because I wasn't paying
Mhm.
attention to how much loans I was accumulating. I was just like, all right, they just
Yeah.
dropped the 10,000 this semester. They drop another 7 the next semester. So I was just happy to get the money. But then when I was done, I was like, but you know, you got to rip that band-aid off. I know I'm in debt. I have to accept that I dug myself in this position. Now it does help that I'm in engineering. It does help, you know, doing a little bit more research before you pick up all the student debt as to, okay, what are my options? What's the salary ranges? These are things I was doing research on, and how to increase your salary a lot faster. Like
Yeah.
the older generation tends to focus on, you know, working up the corporate ladder and taking the years, but times have changed. It's not like that anymore. So actually jumping institutions and trying using offers and being able to, you know, offer certain thing to your manager, be like, hey, I have this offer, will you be willing to match? That's the stuff that helps increase your salary. Because the one thing I learned early in my financial journey is that obviously the more income that you have, the better, as long
Yeah.
as you know how to manage that income, right?
Mhm.
If you're making more and you're spending more, then it doesn't work. But if you're
Then
able
you're
to make
good.
more and keep your expenses at a stagnant level or even lower your expenses, then things become a lot easier.
And damn, I have so many questions. All
Tell you, let's rock. I got you.
right. So, like, I love how you were able to show us like what encouraged you to pay off the debt, because you're obsessed about, paying that off, even though you had those times you're like, eek, I don't know. But I like how you also mentioned that you changed institutions just so you're able to increase your income. So
Yep.
like throughout the, if you can't answer, it's cool. How many times have you jumped ship from that company so you're able to increase your income?
So I would say I jumped ship once, but
Hmm.
I also had an offer and I presented it so that my employer at the time would be able to match that salary, and they did, right?
Okay, nice.
And then afterwards, like the following year, I had to leave because I got offered more, and
Mm.
it was like an opportunity I couldn't resist at that time. So it's just,
Yeah.
I'm young in my career. Let me see what's going on and everything, and then I was able to go back to the company at a
Mm.
higher rate because I negotiated. Like a lot of folks think I'm crazy, but I'm like, if we only have one life to live, so why not just ask the question? The worst they could say is no, we can't do this. So this is where we're at. They're never going
Yeah.
to. A lot of people think that companies will rescind offers if you ask them for what you think you're worth, and
Mm.
the good companies will tell you, okay, this is where we're at. If
Yeah.
anybody pulls an offer because you express how much you think you're worth, then that's more than likely a company you don't want to work for.
You don't want.
So every company knows how to negotiate. Every good company should know how to negotiate, and just it's better for you to increase your salary. It's better for you to come with an offer than to just say, hey, I have more increased responsibilities. How about I get a raise? Like it's more effective in North America to go with the offer from
Yeah.
someone else, and that's where LinkedIn comes into play. Like it's pretty massive.
Good old LinkedIn. So we've been talking about like depending on your circumstances, it's better. It's okay to invest and pay off debt at the same time. But
Yes.
what is a pro and con for you when it comes to long-term investing or trading? Because I know you like to do both.
Yes, I do. um,
Or actually, before you ask the pros and cons, how did you get, because you said you're self-taught, how did you form like from, okay, I like this long-term investing, but how did you switch to like, watch the option trading and everything? How did you get interested in that? That's one thing I love.
So I would say, so I love long-term investing. And when I
Oh,
started off my investing journey, I started with my TFSA. So for those who don't know, it's a tax-free savings account, which a lot of people save in it, but you really should be investing in it. And
right?
started off with ETFs. So I started off with, your S&P 500. I think at the time I was probably in some XLK shares, which is a technology spider ETF. So I was in a few different ETFs and I did that for a year. And then while I did that, the reason I did that is because I started off with $2,000. And
Mm,
I'm like, if I have money, my hard-earned money invested, it's going to force me to start learning more about the stock market because I don't want to put my money in any and everything. So it forced me to learn, and I started learning. And then afterwards, I realized that one of the things that stuck with me is that your investing strategy, it depends on who you are, your persona. So are you a risk adverse person? Do you like risk or you don't like risk? Right? So that was the first thing. And then also how old I am.
mhm.
So the younger you are, in my personal opinion, the best strategies that I've seen is that the younger you are, the more risk you should be taking, but they should be very calculated risk. So I'm someone who sold all my ETFs at a profit after the first year. And then that's when I started buying singular companies of Apple, Microsoft, because I had a better understanding as to the the part these companies play in our everyday economy and how
Yeah,
powerful they are. When you're watching a company like Apple that brings in billions of dollars in revenue a quarter, it's kind of hard to bet against a company like that. So
true.
I developed a strategy where I started buying singular stocks, and then with more and more and more research over the years, over the 2 3 years at that time, I got introduced to options. And the one thing I did was I said, okay, I'm not going to touch my long-term holdings. I'm not going to touch my stocks. I would put, let's just say 5% to 10% on my portfolio. I'm going to tie it to options. And in the beginning, made mistakes. I think I bought a leap option with ARKK, just
Yeah.
like everyone else, but
Ooh,
I bought it at the
yes.
worst time possible. But the difference with me is that I'm very good with risk management in my personal opinion.
Yeah.
So I was able to get out of ARKK when I saw things were going down. And then I started buying, semiconductor options and stuff like that. So a few of those played out, and then I just started learning a lot more about options as to, okay, if I think the market's going down, can I make money on the
Yeah.
way down? Because that's a beautiful thing about options, is that it gives you the opportunity to not only make money when the stock goes up, but if you know what you're doing, or if you have a good idea as to what's about to happen, you can also make money on the way down. So for instance, like
That's
this year with the
mhm.
Donald Trump inauguration, I had a strong feeling the market was going down. In my newsletter, I had put it out. I'm like, I think the S&P 500 will go to about 490. I think it went to as low as 481, so I was $8 off, and made some money on some puts to the downside. So
Yeah,
I really like options just because it gives an opportunity, but I encourage everyone to start with long-term investing first. Like options is way
agreed.
too much risky. People think like options, I can make a lot of money. Like it's a lot of
Mhm.
option traders fail. A lot of them aren't profitable. They won't tell you that. But every year since I've started trading options, I've always been a profitable trader. I'm not making $10,000 or $20,000 yet, but my
Mhm.
goal is that I believe with the time, with the compound interest that's working, that it will start to play out. And I'm okay with taking those risks. I'm okay with being wrong with certain options.
Mhm.
But I know the majority of my portfolio is in long-term quality companies. So I could sleep peaceful at night. I'm not hurting my head. I'm not using my mortgage money or rent money or car payment money to
Yes.
be able to do these stuff.
Yes, folks. Don't do that. I love how you say that, like 5 to 10% of your portfolio goes towards that. So I call it like a risque type
Yeah.
of aspect. Wait until you learn futures. Ooh,
I don't know, man. Future, like everybody tells me about future. Future just seems so. Yeah,
it
I don't
is
know.
it don't trust me. I got bun. I'm gonna get bun. I'm gonna catch bun with futures, but when you remember your guidelines and everything, then
Yeah.
you'll be okay. Especially
Risk
because
management is mandatory for futures. Like
exactly.
you could be in a worse situation than when you started. And that's a part about futures that keeps me away because I'm just like I'm someone who before I was like looking at my charts all the time, but now I've obviously developed over the years where I just set my targets and I walk away. I'm like, okay,
Yeah.
my target go off. Now I know it's time to sell. Now I know it's time to buy. And that's why the leap option like strategy fits me better right now, especially as my
Okay.
day-to-day professional life is like quite hectic. I'm okay with just buying, holding because it's almost
Mhm.
it's simple. It's almost like long-term holding. It's almost like long-term investing. Like I buy an option that expires in 2027, and I think
Yeah.
the stock price will get to this amount by that time. So we'll see what's going on.
And that's
Like for
important. Sorry, we're cutting you off. That's important because you still have your 9 to 5
yes,
and you're
oh
investing.
yes,
Yeah. So
yes, man.
so that's yeah. That part is, and you know what? That's the part I had to remember. You set those marks that you want to enter or exit and keep it. Stay consistent
Yep,
with it
yep.
because you never, especially when you're at work. You're there at work, busy doing a project and things, and then all of a sudden, you see the alert. You're like,
You're
and you're like,
yep,
oh,
yep. Oh, time to sell, and I can't because I'm in a meeting. Right? And I've been there. I'm being honest. I've been there. And that's where I was just like, yeah, this isn't for me. And I had to go through my own journey. It's like, okay, this
mhm,
isn't for me. Like, this is not something where I want to be able to, I'm in a meeting and I can't do anything and the stock keeps going down or the stock keeps going in the opposite direction that I wanted to go. And folks try their best because I get it. It's very appealing. That is what, in my opinion, is closer to gambling because
okay,
with a stock you could buy and hold it for forever and hopefully it goes back up and you make money, but with option, like if you run out of your time on your option, there's nothing to get back, like you're done. So I get it when like sometimes I buy calls, like I don't do weeklies very often, but there's times where it's just like, oh, it's a earnings, I think I could take, like Netflix recently like provided over 200% in like 2 weeks. Now, you know what I mean? Like that's great and all, but it could have gone the complete opposite,
especially with
opposite way,
earnings.
especially with earnings. But then when you're looking at tariffs and you're like, well, is there really any, you know, a risk involved for Netflix with tariffs? Not really. So it kind of worked out a little bit.
You never know.
But
Continue.
as I said, like for new beginners, options don't even think about
Yeah.
options. Like just learn the fundamentals of investing, learn how to utilize your TFSA, learn how to utilize your RSP, your FHSA, all these different accounts that we have available to us, and that could help propel you forward so that you can hit your goals.
And I agree. And I agree. And and I know that you have your own workshops that you do. What inspired you to start doing workshops with Money Mind Resources?
I'm gonna be honest, it was actually something kind of petty. So
Talk the things.
yeah, no,
Sometimes you gotta be
I
petty.
won't even lie to you. In the early days, like I had a few people that I know, or actually someone specific that I knew, and when I started learning about stocks, I'm like, yo, bro, like I'm learning all this good stuff. Like, have you ever heard about the stock market? And this is someone that I consider like my dog.
Yeah.
And this was right after COVID, so after March 2020, when stocks went on massive sales. And he was telling me, he's like, "Yeah, man, I bought a bunch of stocks when the market dipped." And I felt the way it's. I'm just like I just feel like the world is hard and challenging as on its own. Like, why
Mhm.
not just try to help somebody, or why not just be like, "Bro, I'm not too sure if this thing will work, but I've come across the stock market thing, and I think like you should. This is what I'm about to do." And because of that, I say, you know what? if that's how people want to live life, I'm just gonna just start teaching it. First I'm gonna start learning it to the point
Yes.
where I can start teaching it. And that's where when I started feeling getting comfortable with what I learned is when I felt comfortable be like, you know what, let me start posting this stuff on my Instagram. Let's get the news out there where I could start changing people's lives. So like for instance, my journey was I'm like, let me see if I could convince my family first. So I'm not the person to be like
Let's see how your journey was.
I know. Well, yeah, I'm not the person to be like, hey, invest, invest, invest. Like, I don't want to hamburger. Like, people with money is funny. It's a funny thing. So, what I started doing was just starting to show the receipts. So, in 2022, I was showing when I started investing, and I'd send the screenshots when my accounts were down. Like, oh, I'm down for $1,000. Oh, I'm down 2,000, all the way down to 10,000 US dollars. That's how my account just kept bleeding in 2022. But in 2023, I show
Mhm.
I'm down like 500. I'm down, I'm flat. I'm up 1,000. I'm back down a hundred. And then afterwards, I started going up 1,000, going up 5,000, and then you see how the market really works. It's like, yo,
Mhm.
patience pays. And then that's when some of my family members started joining on. They started opening up their TFSA. They started doing the same investing strategies. And till today, like maybe not 100% of their portfolios up, but like 99%, or not, sorry, 90% of their portfolios up to date. They might have one position that's still down or something like that. But with like my family were able to see, like, and now, I don't want to, talk his business, but now my brother has a decent sized investment portfolio, and he's an older brother. So he's just like so thankful for the fact that like I'm able to expose them, because everybody knows about the stock market, but no one really understands it. No one really gets it. And it's like, no, it's one of the best ways for us to be able to grow wealth, because if a lot of people like the real estate market, but typically in now economy, you need a very, very big deposit to be able to get an investment property where you could actually make money, right? If you're looking for cash flow, you need a massive deposit down, which most people don't have. But I try to get folks to see like, hey, if you want a house, why not just put your money in the stock market, and in 3, 4, 5, 6, 7 years, once you're consistent with it, you could use that deposit plus the interest you gain to be able to put on a deposit on a house. Like, stop trying to save your way to hit your goals. A lot of times right now, you have to invest your money to be able to hit your goals. And that's like the real mission. That's the financial workshops that I'm trying to put out.
Yeah.
That's the
And
goal
I
that I'm
love
trying to
them.
get everybody to understand is like, you got to invest your money. Stop being scared. You're letting fear cripple you from being able to make the moves that could change your life, right? So, and that's where it really started off with pettiness, and then I just came to a point where I'm like, I learned a bit more about myself. I learned that even though I'm an engineer, I'm actually an entrepreneur by nature. Like, I'm very entrepreneurial. I think so many different ideas. Like, I have different companies that I'm running right now, and I enjoy it. I enjoy the challenges, and I enjoy figuring out the solutions for them.
See, sometimes being petty works, right?
Not gonna lie.
You know what? I thought it was a different story because I follow you on Instagram, and I know like sometimes you try to showcase things and people like try to block you. And you're like, open this. I'm just gonna do it my own way, right? So I thought it was, which is true because 2020 is when I started. 2020 is when I started this podcast, and I wanted to show more people because I'm really excited about personal finance as well, right?
Yeah.
And sometimes it's not even pettiness, like, yo, since you didn't tell me the info, I'm gonna tell the info, but it's like I get flustered. I'll say flustered when I share all this information. People are like, Camille, I just don't know anything about stuff. I'm like, fam, yo, do you see how many episodes now?
Yeah.
Like,
Yeah.
guys, like I show you guys the post like during April or November when it's financial literacy month. I will give you guys the information. I just need you guys to listen. Just if one person listens and like tells me like, yo, Camille, you're the reason why I'm
That's
like
it.
happy and stuff, right? And I'm
That's it.
glad that you were
Yep.
able to send your listen, the hardest people to join is the family. But
Yep.
because they were able to see your results and then they um, did the exact same thing you did, that's amazing because they're like, yeah, Dream know like something, you know? Him know something. You know I'm young,
Right.
but I'm bright.
And that's honestly, it makes the biggest difference because now you're able to actually provide valuable information. It's not you're trying to go on 10,000 YouTube links and you're hearing everybody talk about all these different stocks, all these different quantum computing. Like there's so much information out there. I'm like, honestly, the
Mhm.
simpler you make it, the easier for you. And like I said, tell most people, if you're new, start with the ETFs. Just buy
Yes.
some S&P 500, buy your Nasdaq, and start with whatever you're comfortable with. Even if it's $100 a month, just start with that. And as automate it so you're not looking at it. And then in a year or two, if you look at it and you like the results, now we could go in a little bit more. But start. Like so many people are just scared to start. I'm just like, please start, because that's the only way you could start to see the result. And then what people do is they wait till the hype gets so enormous and they're like, okay, let me start now. And then the market pulls back 20%.
And they're like, oh, the stock is a
You see,
scam. Oh
you see,
my
it's a scam.
god.
It's a scammer thing. I knew it. I knew it. It's like, bro, like if you had done this 2 years ago, that 20% pullback will be nothing for you right now. Like,
Right?
so it's a mindset. It's a mindset
It
thing, and
absolutely.
you can't force it on people. People will come
Mhm.
to you as long as you're being consistent. You put that information out there, as you would
Yeah.
see. Like I've not changed my strategy, but I've added
Mhm.
a new strategy for this year, which is my dividend goal. And
Yes.
so that's something I'm adding to my arsenal right now because I already have growth. I have growth locked in. So I'm
Yeah.
like, all right, let the growth seeds do what they do. Let me
Yeah.
start building my dividend portfolio because I'm starting to think of retirement already. Like I'm already
Exactly.
thinking 30 years on the line.
And I love that you're saying that because I have a dividend goal as well with folks.
I
Like,
know that's why I threw that alley oop right now.
because like, think about it. You know how many times people are like, oh, so what's the difference in me getting dividends, Camille? I'm like, like eventually you can. I've seen someone actually use like pay like their back the day Metro Pass. Or like, yeah, I don't have to pay my Metro Pass. Imagine not having to pay your mortgage
Yeah.
because you have dividends. And
Yep.
I've seen it with my own two eyes of how so much someone made with dividends alone. And I was like, say less. This is the
Yep.
goal. This is the
Yep.
goal that I want to do. It just takes time. And I think thinking about your TFSA, your non-registered accounts, because that's when the dividends income really comes into play. The FHSA and all that stuff. Like if we think about those things, like to build our dividends, we're gonna be laughing when we're in our 50s, 60s and stuff, right?
Yep.
And I don't want to
Yep.
say how I know you said start when you're young, so we're not asked no age.
No, I'm 31, turning 32 this year. I got no
Okay,
problems with my age. My age is a blessing, though.
see,
Some people don't live to see that long, so I'm embracing every year that God gives me life on this earth. So we all good with
exactly.
that. Yeah.
And I want us our because I'm almost in my 40s. I know it
Oh
sounds.
wow, you look great for your age. Oh,
I try, but like 31, you being 31, what what advice would you give someone 5 or 10 years younger than you? That's like, see what's
that's
I
an
don't know about.
amazing that's an amazing question. A few things I would say is try everything. Like while the younger you are, the more risk you should be willing to take, but not even just in investing, just
Mhm.
be open to trying new things. Be open to trying different positions. See what you like, see what you don't like. If you're in university, attend career fairs, get exposure to different things. Look for the high income jobs. Get into trades. Look at trades. Not everyone needs to be an engineer. Not everyone needs to be a doctor or a lawyer. We need more plumbers in this world. I'm telling you, for someone who's in the field,
Talk
we
the
need
things.
we need more plumbers. We need more electricians. We need more carpenters. Especially the Black community. That's something where we're
Mhm.
lacking, and that's the fields that's paying today, and they're going to pay in the future. So that is and then start investing. Start investing. The sooner you can start, the less you are a consumer and the more you are an investor, the more ahead you would be in life. And I'm not saying this on no egocentric tone, but like I'm in a better position than a lot of the people around my age. Not because, I was gifted $100,000. I didn't inherit a bunch of money. I just shared my story. I literally started below zero. I started, negative 70,000 plus. And I had a mindset. I was willing to make sacrifices. So, life may not be comfortable when you're in uncomfortable situations. So there will be a period in time where you have to grind, you have to give up something that you thought you didn't have to give up. But just keep
Mhm.
going. Keep going, keep trying, keep learning. Be open to being flexible to learning more, adapting, and implementing things that would put you in a position where you have more assets as opposed to having more liabilities. That's
Mm,
really and truly, in a nutshell, some of the things that if you could take anything from this conversation,
yeah.
gain more assets than you have liabilities. And your
Right.
life will be in a whole different stratosphere compared to anyone else in 20, 30, 40 years.
Especially, yeah, because and we have to remember, like you said, when you came back from Grenada, you didn't have these experience or knowledge, but you were able to develop it over time,
Yep.
and really telling the youths them, gaining assets will be far more better than
Yep.
gaining
Debt,
things.
liabilities. Yeah, things. You're right. Things, you don't have to have the newest anything. Like if you have a phone, stick with your phone. If you have, if you could get a
Anyone that's
cheap
looking.
car, if you could get a cheap car, and I think that's one of the biggest downfalls to a lot of folks is that they always want they think having a car puts them in a status position amongst everyone else. Oh, I got a Beamer, I got a this, I got a that. But it's like, nah, a car is a tool. The minute you drive it off the lot,
Yeah.
great.
We got another.
The big up. The minute you drive that car off the lot, it depreciates in value. So,
Yeah.
it's one of those things you don't want to put yourself where you're paying 700, $1,000 a month into a vehicle, unless it's a tax write-off because you own a business, then that's a little bit different. But majority of folks don't have a business, so why put yourself in that position? Sometimes you might have to make the necessary sacrifice and get rid of that car and save up $3,000-4,000 worth of cash and buy you a little jiggy jiggy and let that jiggy jiggy take you back and forth to work. Like that, that's really what it is. Spend a little money
Especially
to
with
make
these
sure,
gas prices. Jeez.
especially with these gas prices. I
But the
mean,
gas
gas
prices been looking nice. I'm not gonna lie.
recently, recently,
Because it's
recently,
cool.
and
Since the weather's too cool, they're like, okay, let's give them a blind. Let's bring it down 10 cents.
I'm gonna be honest with you. My whole my I don't want to call it conspiracy theory because I think it's realistic, but my reason for gas price going down right now is because I think the larger heads understand how people are fighting to pay off some stuff right now. Like mortgages coming up for renewal. I think they understand because if I'm paying attention to a few countries' economic data, and a few of
Hmm.
them have been contracting. So we've had the US have a first quarter of negative GDP, and for anyone that doesn't know, once you have 2 quarters, so that means 6 months. So
Yeah,
6 months in a row, once you have 2 quarters of
that's
back-to-back GDP, that's a recession. And the US already had one. And then there's a few other countries where I'm seeing signs of, I don't want to call it like like, and folks think like recessions have to be like 2008. No, it doesn't have to be
Mm.
world financial recessions, but it could be a mild recession. It could just
Yes.
be lower, less consumer spending, which I think we're seeing currently. And
Absolutely.
I think the bigger heads know what's going on, so they're giving us a ease up at the pumps. Because if gas prices was at right now, it's about $60 a barrel in the States. So if it
Hmm.
was at 70, 80, 90, like things would
Yes.
be way worse. So I
Yes.
think we're seeing less demand for travel. People are probably going to stay home this summer. They're probably not going to go as
Staycation.
much places. Staycation's going to be the thing. That's just
Mhm.
my from the data that I'm seeing. I think that's what we're seeing with the gas prices. So I'm like, look, keep the gas price down. Less expensive for me, more assets I'm going to be buying. Like that's
Right.
really and truly all it is. And a recession is a time to be able to buy assets at a cheaper price. So I don't
Exactly.
want people to be scared. I know recessions comes high unemployment, and Canada is already in a high unemployment range. We're at 7%. I think Detroit is at not Detroit. Windsor is at like 10% last time I heard.
I've
So
heard
there's
about, yeah, yeah.
different cities, different provinces that are seeing massive high unemployment, which is a symptom of a recession. I just hope everyone is able to get a job. If you're in a field that's a little bit more contract and a little bit more unstable, yo, we got ChatGPT here. Start looking at posting, start getting your resume going. Like ChatGPT is a cheat sheet. I don't know. Like if everyone's scared of it, I'm like, guys, it's a tool. Use the tool. Like
Big up
it's supposed to help
Delroy.
you.
Big up Delroy. Do you have a name for your chat GPT?
Oh, Delaware, that's yours. I'm dead. Um, I I do. What was mine again? I can't remember. Oh, right now I just
Right.
have
That
Money
means you don't
Mind.
use it enough.
I got Money Mind Mentor. No, actually no. Trust me, I use it a lot. But I just use a tab. I got a couple agents for like specific things. Like if I'm working with clients, like I fed it all the data and all the things I want to
Yeah.
follow. But lease that car if you have a business and you're in a certain
Yeah.
tax bracket. Yes, yes. So like I said, it's
Absolutely.
hard to give like general advice to everyone because everyone's different. But leasing that car, getting that tax write off when you have a business, but a lot of people, we were trying to get that conversation going where, it could benefit a lot more people. Yo, shout out to Damien.
Big up, big up, big up. Yeah. And you're right. ChatGPT to the world. And I know because I want to respect your time. And I'm trying I'm having an amazing conversation with you, you know?
Yeah, no, it's we're good, we're good, we're good.
And do I have one more question? Let me do one more question. One more question. So we talked about the GDP. And then just what would you tell someone that, and I think we talked about it mostly, if they're just starting and say they're in their 40s. Yeah, let's talk to the ones that are a little bit older than us. Let me close to them. Let's talk to the 40s and 50 folks. What advice would you give them just because they didn't start when we were this young? What
Yeah.
would you mention to them? Because sometimes we have some tips and tricks that we could teach the older generation.
No, 100%. And I try to get my older family also to get going. They're obviously a bit more reluctant because they're closer to that retirement, so they want to be a little bit more selective with their funds. A couple things is, if you're older, let's just say if you have somewhat a nest egg already there, then you may want to
Mhm.
look at taking some risk off the table and put it in the bonds because
Mm.
bonds is more of a wealth preserver, not a wealth builder. The bond yields don't yield enough. Inflation is 2 to 3%,
Yeah.
and bonds are yielding 3, 4, 5%. Like it's more of a wealth preserver as opposed to a wealth builder. So that's the first thing I would say. If you don't have a nest egg, or you're looking to start, you want to build something because you still have time. You still have 20, 15, 10 years to build something. If you're a person who is okay with some risk and some volatility, I would say start off with the ETF in the S&P 500. Automate it. Because you're older, you want to be as aggressive as possible, right?
Mhm.
Now, if you're someone who's not in that category, you're scared of all the volatility in the market, which honestly some people can be. Um, from my personal preference, especially for this year going into next year,
Yeah.
that's why I'm a little bit more comfortable going dividend route, because I personally believe there's a bit more uncertainty in the market. I don't think the tariff thing should just be scoffed at or overlooked. I think
Yeah.
those changes will have some kind of impact in our economy, maybe towards the fall of this year. So I would advise going the dividend route. So I posted it yesterday on Instagram, or I think the day before, where I am investing in an ETF called JEPI, so JEPI, and it pays you a annual yield of 7%, and it takes a lot of the risk, a lot of the
Mhm.
volatility out of the market, because the way it is designed, it's basically producing income based on the premium of selling of options.
Hold on.
So
Can you see the ticker again? And remember, folks, this is for entertainment purposes and
yeah, yeah,
educational purposes
you're
only.
You're right. You're
I
right.
don't
I
want
am not a financial
to.
advisor. I do not give financial advice. I am
We're
just
just having a
sharing my
conversation.
notes. I'm sharing what
Right.
I do, what I look at, the things that I analyze. Um, I've gone to institutions that don't know anything about these assets, which are making me money right now. So
Mhm.
I'm just sharing with you my perspective. This is not advice. But
After
it's
make sure you see it, you know?
no, no, no. Good looking out that
Yes,
way.
bro.
I keep forgetting about that. But no. So it's JEPI. So
Mhm.
JEPI. That's one of the ETFs that I use to build me. So what it does is it pays you. So let's just say you had $10,000,
Mhm.
and it will pay you that 7% in dividends, but you get that payout every month.
Yeah.
So at the end of the 12 months, you would have that 7% on your initial $10,000, right? So $700 in dividend payouts. So 700 divided by 12, that's how much roughly you will be receiving. Now, it does matter in which accounts you do it in, because if you do it in the TFSA, it's going to be a little bit less because there's that 15% tax withholding tax.
Did you say
If you were
15 or 50?
one
Because did you
five,
hear the news? Did you hear the news?
if you're
How
talking about the new
there's
Trump bill that's going up
how
to
he's gonna
30
switch it 50, I heard.
or 50, I heard 30%.
Oh, I gotta double check. And me and Damien was talking about it. See?
Yeah.
She's
So
like, make sure you highlight.
this that because of that withholding tax is the reason why my dividend strategy is in my
Mhm.
RSP, because you get
Okay.
that
Yes,
you
yes,
get
yes.
you get to avoid that 15%. Now you can't touch that money, but the whole idea is my RSP is for retirement. So
Exactly.
this is an income I'm going to be relying on in my retirement. So it will get taxed later on.
Hmm.
However, the benefit of putting money in your RSP right now is because you're going to get a bigger tax return next year because you're lowering your taxable income. So if you were
Exactly.
making 100,000 and you put an X amount into your RSP, when it's time for taxes, they're not going to tax you at 100,000. They're going to tax you at 90,000 or 80,000, whatever the math is. So yeah, so JP Morgan Equity Premium Income ETF. That's one of the ETFs that I use to be able to get monthly dividend income. And I love it because whenever I get I've started doing now is whatever payments that I've gone,
Hmm.
I've started buying different growth companies that also pay me dividends. So that's just a little cheat sheet for y'all here, a little gem.
Hey.
So for instance, I got $115 in dividends.
Hmm.
Recently, I used that $115 to buy fractional shares of a company called Eli Lilly, which also pays a dividend, but it's a smaller dividend. But
Yeah.
Eli Lilly is for growth. So
Okay.
for the
Okay.
older folks, like, if you wanna get that comfort of seeing some kind of return on your money, because as I said, investing is all psychology. If you're like, oh, I'm older, I'm scared, I don't want the market, then you look at a ETF like JEPI, and Once you start getting those dividend payout because it's cash into your account, now you could buy the S&P 500 with that dividend. Not because it's just rinse and repeat, and then you get a snowball effect. So if you keep buying more JEPI shares, you keep buying more, and it pays you out more dividends, then you could use that dividends to probably buy something else, right? So it's just a matter of diversifying your portfolio, gaining exposure. For me, getting the exposure of Eli Lilly gives me exposure into the healthcare sector. And if you know what Eli Lilly is, they are one of the manufacturers of something similar to the what's that weight loss drug everyone's taking, Ozempic. It's something similar to Ozempic. Like, hey, whatever people want to do, you want to spend your money and get those weight loss, cool. I'm gonna make money off of it by investing in these companies. I'm not advocating for weight loss, Ozempic, nothing like that. Whatever. But I know how to make money off of it. And with Trump being in power, you could expect a lot of volatility. And when you have high volatility, that's when ETFs like JEPIs tend to do very well.
Okay. And then Damien said the issue with the bill is it won't matter which account you put it in. So as long as it's a U.S. stock, we get even with the RSP.
You see, and Damien, you might be right because that's the question that I had. But I wasn't 100% sure because I don't think there's. I would have to confirm it because it didn't seem like there was much clarity on that aspect because it just sounded like the withholding tax would just get increased. So I wasn't too sure if it also would apply to what was sheltered from that withholding tax. So that just you might be right on that, Damien. I'm not 100% sure. Either way, I'm still going to do it because you can't live like. Tax is tax. Like you're gonna get taxed regardless. Even if you're putting money in the TFSA, it's going to get taxed higher. Like you're going to get taxed. Uncle Sam don't get his share, and it is what it is. And I don't think that will. Let me not say I don't think, but there is a chance maybe when the president changes that some of these things go away. That I'm hopeful for that. Maybe the alliances come back. I'm hopeful for that. Either way, I'm being a little bit more mindful of that stuff because you don't want all of it to go in tax, but I'm obviously paying more attention. But the only thing I don't like about this administration is how unclear things are. There's not a lot of details. It's hard to confirm certain things. But it is what it is. As long as it's building wealth, as long as I'm still being able to get that income, then I'm gonna keep going until something, I have to re-strategize or change my strategy.
Right. Move on. Let's see 2 more comments. What's that? Tax is tax.
Tax is tax. Like they're gonna get you. They're gonna get you somewhere. Right? And it's out of our control. We hopefully some politician could come up with something where we could, have a better option. As of right now, like I'm not gonna stick too much on the new stuff because they mention it, they're not really outlining, they're not clear, there's no real structure, so we don't know if it really is going to happen. Is a bill that's being proposed, so things might change. The final bill might be less, like, who knows, right?
And you know how that that guy accent things. He's
a wild boy. He's a wild boy.
Yeah.
Honestly, that's why I'm like, I wanted to buy way more growth earlier this year, but I'm like, honestly, I don't know. For the next 2 years, I really don't know. I don't know. So I'm like, let me take a little bit of the uncertainty out of it. Let me just get some dividends, something I could see that's coming back into my account. Because like I said, I already have my growth seeds already planted. So I'm like, let me not worry about what the market does, because there is a chance the S&P 500 doesn't give a massive return this year. I think it's flat year to date. Like it's within a weird range. And if the US does fall into a recession come this fall, I've never seen a stock market make new all-time highs when the country's in a recession, even if it's mild recession. I've never seen it. So when I'm looking at all that stuff, and I think Canada's in a recession. That's just my personal opinion. I'm seeing signs of it. But I think, but eventually we will get out of it. The economy will go back to expanding. I saw him talk about 50% tariff on steel just yesterday again. I know people who've just gone and laid off in the construction industry because the price of steel has gone astronomical. So now company budgets can't pay for the projects that they had. So I feel bad for the people who are impacted by it. However, I'm
Mhm.
staying informed and I'm staying alert, and I'm just making sure I could do whatever is within my control.
And I'm glad that you're, following the news and everything, and just making sure you're informed, because that is important when it comes to doing stocks. And but I just want to remind folks, like, even like with the 9 to 5, and the way that your mind works is that you're able to do that. But we're not telling others that
Yeah.
that's what you have to do,
No,
right?
you don't.
Because then you'll
Yeah.
just stress yourself even more, right?
Yeah. It's not worth it. And then you tend to like, oh, now you're scaring yourself out of investing because you're like, oh, well, I don't know what's gonna like this moment will pass. Just as how no
Yeah,
one thought COVID moment would pass, this moment will pass.
yeah.
And the market gonna do what the market do. The market is designed to
Been
keep
doing
going up, right? That's just what
what
it
you have
is.
yours.
You're right. But now I'm like, I'm more informed. So that's why my strategy may not fit your strategy. Like, that's why
Hmm.
I tell people start with the ETFs, but I
Yeah.
only own a couple ETFs, right? A majority of my portfolio is single stocks, but that's just because I know what I know and I'm comfortable with what I know. However,
Yeah.
if you're the book on one-on-one with me, I'm going to say, hey, I'm going to analyze you first. Hey, what's your knowledge base at? What's your risk tolerance? What's your goals? Based off of these three questions, now we could build a foundation for you to start building your financial future. And then most of my clients, I want to say all my clients, are very successful investors. They're doing very
Pop,
well,
pop, 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 pop,
and I'm
pop.
looking forward to sharing more of their future, their journey in the future, just so that they people can have an understanding as to how I've been helping folks thus far. Like I said, I'm not a financial advisor. However, I like to share with you a lot of the research that I've learned and a lot of the assets that could get you to a point of financial security and stability.
And I also love that you have entertaining Instagram and Reels. I wanted to mimic one of yours. Soon, now that the weather, well, once the weather gets warmer,
Yeah.
I'm gonna try to do that one with like the Soca vibes and everything, because it's almost Soca Fest season. I mean, I think I've seen so many people been going to Soca Fest. I'm like, okay, you guys have money, all right,
Hey,
bet.
sometimes we gotta get that release out, man. We gotta get that release out. It's too cold out here. I gotta stay warm. I gotta jump
It is
and play a jam.
too cold. And
I
even
got
with that, what are and I always ask everyone this, what are 3 things you wish you knew about personal finance or investing earlier? And I know you want to pelt waste, but you have to also think about, our personal finance and things.
three things I wish I knew before about personal finance. I would say, you know, and I could talk more about just my journey. So while I was in school, a few things I would do is when I have my part-time jobs or my co-op jobs, probably sit down and try to figure out a plan for that money. So, maybe paying off more of my loans. Because I strongly believe in having no debt, but
Mhm.
you want to reduce the amount of debt that you have, because even though it's great to say I paid off $50,000 in 2 years, that could have been $50,000 invested. That means I could have had close to $250,000 investment portfolio today. Like the amount of opportunities I would have that were present at the time. Like, I felt
Mhm.
sad knowing that, damn, like I could have done X, Y, and Z, but it is what it is. Like, it is my story and I can't dwell on that. So
Yeah.
just trying to manage finances even from a younger age, just being more mindful of as to how much debt I rack up, trying to avoid that debt. Another thing I would say is, like I said before, start. The sooner you can start, the better, the
Mhm.
absolute better. And the third thing I would say, what is the third thing? Um, I guess just be willing to take risk. You gotta be
Mhm.
willing to take risk. If you have big goals like myself, then you may want to take a lot more risk, and just be open to different things. Be open to crypto. Like, I know a lot of folks are scared about crypto, but try to implement a little bit more risk management. So like, for instance, crypto for me, my crypto portfolio cannot be more than 10% on my entire investment portfolio.
I was gonna ask you that too.
So like like recently, I think earlier this year when Bitcoin was over 100,000, I was investing in crypto heavily in 2022, so I bought quite a bit. So I took profit because it ballooned to over 10% on my investment portfolio. Right. So I sold some and then I bought more stocks with some of that profit. But a lot of folks say they don't know what it is. You think I know what crypto is? I have a basic understanding, but however, I could see the speculative assets still continue to grow over the last 10 years. It's actually one of the better performing assets. And if you think we're going to be in a more digital world in the future, then there will be a place for digital assets. And that's what crypto is. They're just digital assets. So whether they may crash in 2-3 years, more than likely, but we see them continue to recover. Recover and keep going. So I just try to tell folks like be open to different things and be okay with being wrong about something. You might have an investment and it didn't work out. But as long as you have a proper plan in place and you did your research and you did your due diligence, then it is what it is. And another thing is stop being so reliant on the banks, because a lot of people think, well, I can't invest on my own. I'll just pay the bank to do it. But when you actually pay attention to some of the things that not all banks, but when you pay attention to some of the things that some banks have, if the stock market went down and your own personal account went down, I could assure you the bank account went down too. They're all tied to the same thing. The difference is they're just charging you a much higher fee, right? So just be mindful of that and just, don't be scared of taking risks. Be open and willing to explore things, especially if you have time on your side. And if you don't have that time on the side, let's come up with that plan. Let's get serious and let's get to work and let's get this money.
Bam. Exactly. Boy. And Dre, what is I know you have goals that you want to do with your partner. You have the 9 to 5, you have investing. What other avenues are you doing in right now? I know you want to go on vacation because we were talking about it offline.
I'm going home real soon. Get that charged, get that battery recharging, some coconut water, and But right now, I am running a 23 unit apartment building in the island of Grenada. It's called Buena Vista Apartments. So my dad had purchased a land years ago. He had built a structure on it. And, a few years later, I said, hey, why don't we turn this into apartment? Because Grenada has a medical university down there, SGU. But then COVID kind of switched things up a bit on us. The amount of students, online learning, actually deterred students coming from the island. So the same amount of student supply that was coming in the island pre-COVID is not the same after COVID. So we've taken a full switch to the Airbnb route. Well, we still take students, but it's not the same amount of students coming on the island anymore. So the apartment buildings are, they're taking a hurting. But so we made a switch to the Airbnb. And like I said, like learning about finances and learning the stock market and learning how to analyze companies prepared me for this moment. And that's where I said I feel like I'm more entrepreneurial, because when I was looking at AMD, Nvidia, Apple, Microsoft cash flow statements, their income statements, how much debt that they have, when I'm looking at Buena Vista's financial statements, it made me realize, like, okay, we got some work to do. And I started learning different traits that all these successful CEOs have, like how they focus on one thing, do really good on one thing, and then expand your business. And I'm trying to the different things that I've learned thus far, I'm implementing it into our own business as a family. So, I don't want to say too much, but right now we went from a position financially where we were making money to where now we're being self-sufficient. So it's just a matter of increasing those goals. Like every company, you're going to have those rough patches, rough waves, but it's just that year over year increase, and that's where I'm still learning. I'm not no expert in the space, but I want to say like it really fits well into what I'm doing, and I'm starting to learn more about myself. Like I have a lot of great ideas, and it's just a matter of like I'm the mastermind behind it, and how do I delegate the responsibilities to the different people. So yeah, so I'm running that. I'm an engineer. I am a dad. I got a family. Um, and I am working on building content. I got to do much better job at that. So I'm re-strategizing. That's why the
Oh, you better
vacations.
be. Trust
I'm
me, you better
re-strategizing.
be. And
No,
hey,
no, not at all. You're like I view our past quite similar. So it's just
yeah.
a matter of, like you said, nothing's perfect. It's making the tweaks. It's not giving up. A lot of folks,
That's
it's
right.
easy to give up, and it's just a matter of, okay, how do I combat what I'm going through right now? How do I avoid
Mhm.
burnout? How do I do all these different things? How could I be more consistent? But working smart at the same time. Like, a lot of times we taught to work hard, but it's really work smart. And
Mm.
you know, if you could do something in half an hour as opposed to hour and a half, like figure out that half an hour away. And that's what I'm working on. And I'm looking forward to it's a challenge. Like, nothing's easy. I feel my down days. I get sad when I don't execute on certain things, but I'm not someone to dwell on it. I've tried to transition my mindset so I'm not dwelling on these type of things constantly. It's like, all right, we messed up, we made a mistake. Okay, learn from that. How do I avoid this going forward? And
Mm.
that's where that positive mindset, that optimistic mindset comes from. So just keep pushing.
And I love that because I could really see that, like your newsletter, you're building the content and everything. And I'm like, yes, Dre, go on, go on, go on. Like it brings me joy to see another individual like in our community that's like trying to help everyone. And
Same
and
here.
I'm
Same
and
here. We
it's
got we got to link up. We got to meet in
we
person.
go. Yes, yes, we
Yeah,
are.
let's
We
get
are.
this
Trust
going.
me.
Let's let's get this
When the
going.
weather is nice.
And that's the thing, right? We are who
But
we
you know what?
are. Like, we
We
operate
shouldn't make
in
a big
sunny
deal.
weather.
We
We
do.
operate way better in sun. That's why I told myself, I'm like, there's no way I'm going another year without taking a vacation, because that's what ruined me this time. Like, I didn't take the vacation, and this was the worst winter we've had in a long time, and it drained me. I need that. I'm like a solar panel. I need to be put back
Yeah.
in the sun so I could charge back up and keep going.
Awesome. Right? And I know you're gonna be able to do that. And we definitely gotta link up because I know there's so many things that we can collaborate on. Like
Yeah.
this is only the beginning, folks.
Yeah.
I'm
It
seeing
yes. I got some
right?
stuff coming, so you don't worry. We will be in
Yeah,
contact. I got ideas. Like I said, I got the
yeah.
ideas. It's just a matter of putting a plan. And
Mhm.
I'm working with a few folks to make things a little bit easier, so that I got my content coming up soon. I got great ideas. I got a great stuff coming. So I'm looking forward to that. And we hope, we will collaborate. Let's speak it into existence. Am I there?
Wow. So the universe didn't want us to be great. The universe tried to mash down the place.
See that?
But
Went silent there.
good. We're good.
Okay.
We're good. Yeah. You see how the universe? I know we were talking about cold weather too many times. My bad. My bad, universe. My bad. We love this
It's like, let
weather.
me slow down your internet there.
Right? Literally. I was like, what just happened? But no, this is how people can find you on Instagram, on Facebook. And if you are in the gosh, why am I forgetting it right now? What Black Investors Group?
Yeah, so we have the Canadian
Black Canadian
Investors Group on Facebook, and then the
Investors
Black Toronto,
Group.
yeah, Black
Something
Canadians
like that.
Investor Group on,
Yes.
yeah, we have a few groups out there on Facebook, but that was like the
Yes.
main one.
Okay, yes. Yeah. So that one, definitely check him out. Um, check him on Instagram. He's sending posts. And you do have YouTube. You have YouTube as well.
I got YouTube also. So yeah,
Not yet, or you
once
do?
you,
I feel like you do.
I do. I do. I got YouTube. Yeah.
Okay.
Yeah. I've been focusing a lot more on YouTube
Okay. So I'm gonna
recently.
put it in the show notes. Yeah.
Yeah, you put all that there. So I've been focusing on YouTube and I'm picking one thing and trying to get really good at that and then look to probably expand later this year.
Mm, that's what's up. And because the universe is trying to be disrespectful, Andre, Dre, this has been an amazing conversation. Honestly, yo, we could have talked about more stuff. I do want to talk about more stuff, but I have to
We're
respect
going to
time
save
because
it for more
I was like, no,
episodes.
can we talk a little longer? Exactly. So
Yep.
definitely, Andre, thank you so much for coming through. Folks, make sure you link up with Andre and things, and because it's the last day of the month.
It's the last
Sheesh,
thing.
we're
Yep.
almost we're almost into June. So let's hope that there's gonna be more beautiful weather coming, and we'll be able to relax and just go with the flow. Make sure you guys like, subscribe, tell a friend to tell a friend. And Andre, before we go, is there anything you want to tell these folks?
Honestly, you could just follow me on Moneyman Resources or Dre Inc. _473 on Instagram. I'm also on Facebook, so Dre Glean, DREGLEAN. And then you can obviously follow me on YouTube. The link will be in the description in the bio on, but you could type in Money Mind Resources on YouTube and you should be able to find my channel. We have a lot of upcoming content coming. I'm looking forward. I'm going to be changing the style a little bit, going to be doing way more interviews with people who live in Canada, who work in Canada, and who have massive either real estate portfolio, crypto portfolios, or stock market portfolios. It's time for us to start having more conversations within our community and having that discussion more at your dinner family tables and so on. Um, just want to say this has been a great opportunity. I appreciate Camille for allowing me to bless the platform. And I really look forward to connecting with more folks like yourself and to your entire, all your followers also, so that we could develop a stronger community. There's so many of us with so many goals, so many aspirations, and we could
Mm-hmm.
help each other. Like I said, life is difficult, too difficult as it is on our own. We need to be more of a community, as we could see other communities do the same thing. We could just put our special twist on it, our special blend on it, because it is what it is. So I want to say, folks, please look into investing. Stop sitting on the sidelines. Stop being scared. Um, we're making money out here in these markets. You don't have to be a trader. You don't have to look at your charts. You don't have to look at your account every day. This is something you want to set up like a bill. Set up something for yourself. If you have family, set up something for your family so that we all have something to pass on for the next generation. So, with that being said, I appreciate everyone. Hope we can have a great conversation, and I continue to working forward with everyone. And Camille, don't worry, we got something coming.
Bum. And Andre, again, thank you for coming through. And I absolutely see that you're truly building generational wealth, especially with your family. And that, when you said that part, that warmed my heart, because I think that's one thing that we need to do, is not only as a community together, but first start with our family and
Yep.
then reach out to the
And then
others.
reach out.
So
Yep. Get the information
that's
out there.
exactly. And see, you don't have to be petty no more.
No, no, I honestly I do with love. I really try to help
Yeah.
people. I do. I want to tell people, like, I see the path how I'm going to be a millionaire. I see it. I know how I'm going to get there.
Yeah.
Let's help work on your path. You know what I
Yes.
mean? Let's get to that point.
Oh,
Even if you don't hit a million, maybe you hit a few hundred thousands. That is
yeah.
still better than a lot of people
Negative.
out, right? It's so much better than having nothing or having to work till you're 70 and you're still struggling to make ends meet. So we want to be able to change lives. There's a lot of misinformation out there about the market, but we're all here really, really implementing it, being consistent, and executing on those goals.
Yes, sir. Yes, on that note, folks, make sure hit like, subscribe, tell a friend to tell a friend, and let's create a way so we can build that generational wealth and keep pushing. All right?
Let's do it.
Peace and love, y'all. All right.
I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. I just wanna be free. I just wanna be free.